And Kimberly Foss to continue the conversation. Kimberly Foss, certified financial planner and president of Imperial Wealth Management. Kimberly, welcome to the show. So it seems like Jay Powell is willing to shake this market up. Does this change the game for investors?
I don't think so. I think I've kind of been on the standpoint that he should have done 50 basis points last week, So the fact that he's coming out and being very transparent, as your previous guests mentioned, is very, very good, I think, for the market and for the investors. It's shaking things up. But, people have to understand that we do have to raise these rates. We've got inflation over 7%, and who knows what the CPI numbers are coming out. I think he's trying to get ahead of the game. And I think it's actually an opportunity for clients to look at their portfolios and reposition so that they can be defensive, but also ride through this market for the long term.
Okay, what looks like right now it's going to go along for the ride?
I'm sorry?
What looks like right now it's going to go along for the ride?
So for long term, for my clients, what we're looking at right now, obviously, is, inflation protected securities. That's kind of an old hack. We've been putting those into the portfolio for the last 3 months. But I'm also looking at overweighting in value stocks, right? So value stocks have a tendency to outperform about 300 basis points over growth stocks in the long term. So, and we know that historically speaking, the stock market does perform the best in return for clients over the long term through geopolitical issues, military issues, all those kind of events. The market does adjust to that. So clients should be looking to maybe if they want to overvalue into those value stocks. Also, I really like interest rate sensitive stocks such as like utilities. Those give you a nice, good 3-4% dividend. Plus, they give you the growth of the stock market as well. So we're trying to keep people completely diversified. Obviously, we're in 12,500 stocks over 44 different countries, which is very diversified. But I also am overweighting a little bit in those areas that we just discussed.
Appreciate the specifics there on the skews for sectors. Mm-hmm. I want to talk about utilities in a specific just for a sec. It's really interesting. As I was learning about the market over the past decade, a lot of people said when you get going, okay, stocks that like rates, that's banks. It's not dividend-paying utilities. We're getting the opposite right now. Utilities are doing better than the banks. What's going on?
Well, I mean, I'm not an interest rate expert. I'm not sure in that regard, but we do know that utilities do respond to interest rates, and I think that you've got higher energy prices going on there. So you've got the utilities going up in that regard.
True.
But you've also got a nice dividend paying with that too. So I don't know about you, but we live in California, and my PG&E utility my bill's never gone down ever. So I feel like buying some of those utility stocks that you're getting paid on that dividend as well. So that's a nice alternative, very different than what we normally think.
Yeah, pretty much the same deal with the ComEd out here, Kim. Pretty much the same. I like the point about just energy prices too for them, whatever it is, because I don't know either that this relationship's kind of flipped on its head. But many often say that the financials will be a way to kind of get through this higher rate storm. But they're not working right now, and they didn't, at least from what I saw in the notes, didn't make your list either in terms of your favorite groups right now.
No, not at all. We're not, and again, we're not trying to pick sectors. We believe in a very, very well diversified portfolio in all sectors. But there are a few that do perform in good times and bad times. And, utilities apparently are one of those sectors right now. And again, the small cap and large cap value stocks are going to add value to the portfolio as well. My sector of clientele, my retirees are looking for dividends. And of course, with interest rates being so low for so long, we've had to have to supplement in some way without increasing the volatility of the portfolio with regards to equities. So we got to do it's a balance there. And interest rates going up, that's going to be a good thing for retirees, but it's also going to be a challenging for growth sector of the market.
Kimberly, to that point about retirees, there was an article today I saw someone tweet it out. I read a little bit of it, but it was pretty straightforward. It basically is the boomers are back, and those who enjoyed a huge increase of wealth during the last 2 years are now ready to spend it. That's retirees as well. I'm curious if any of the clients are erring towards the side of just withdrawal. Do people say, you know what, I had an extraordinary run holding Apple for 20 years. The market just went through its most expensive period for tech since .com. Is anybody just saying, oh, and by the way, they're hiking rates, let me just get out of bonds and stocks, leave a little portion in? Is that a trend right now?
Not for our clientele. They are very well educated and they understand the dynamics of the markets. That's just going to be boom and bust times. It really comes down to allocation, what your portfolio is with regard to where you are in your stage of life. I like to use this little acronym called DARE, which is diversify, asset allocation. Where's your asset allocation commensurate to your ability to stay in risk and stay in the risky parts of the market as well as the boom. Rebalance your portfolio in volatile times like we're doing right now, and then evaluate where you are when you're in your stage of life. So for my retirees, they're looking to, they've saved a lot of money in the last 2 years as well because they couldn't spend it. So they are looking to spend if they can. Again, is the world opening up so they can go on the cruises again? So that is a propensity in my clients with my retirees, that they're looking to spend their portfolios, pull money out of the portfolio to spend. And also, I'm also adjusting for inflation. Things cost more now. So I'm telling them, look, we have to adjust your withdrawals so that you can live and pay medical bills and pay gas in California.
Yeah. Kimberly, really like that insight. Very helpful for us to get some clues into what your clientele is doing. Appreciate you joining us here today.
Thanks so much.
You got it. Kimberly Foss, certified financial planner and president of Imperial Wealth Management.